Welcome, ladies and gentlemen. My name is David Skidmore, and I'm a professor of politics and international relations here at Drake. I'm also director of the Principal Financial Group Center for Global Citizenship, which is sponsoring tonight's event. This is, I think, the fifth event that we've had featuring a panel of economists, and including, I think in each case, at least a couple of folks from the Principal Financial Group, focusing on issues related to the global economy. We've been doing one per semester, and tonight's event is going to focus on regional trade agreements. So the negotiations currently ongoing about the Trans-Pacific Partnership and the Transatlantic Trade and Investment Partnership, both of which the U.S. is involved in. So we'll talk about that in a moment, but let me just introduce our panelists tonight, and then we'll say a little bit about the format. So immediately to my left is Jim McCaughan, who is Chief Executive Officer of Principal Global Investors. He's also President of Global Asset Management for the Principal Financial Group. He graduated with a degree in mathematics from the University of Cambridge and is a fellow of the Institute of Actuaries. To his left is Indy Karlekar, who is head of the global research for Principal Real Estate Investors. He has held senior research positions at a number of real estate investment management firms. He's also worked as an economic analyst at the Economist Intelligence Unit. He graduated from St. Stephen's College in India. He received a master's in business administration from Jawaharlal Nehru University in India. I'm sorry about butchering that. He later earned his PhD at the University of Cambridge in England, so we have two Cambridge graduates with us tonight. And on the far left is Robert Blecker, who happens to be a lifelong friend of mine, and he is a professor in the Department of Economics at American University. Robert's research interests include international trade, open economy macroeconomics, the value of the dollar and the U.S. trade deficit, economic integration in North America and the Mexican economy, and the limits to export growth strategies in developing countries. He received his PhD from Stanford University. So thank all of you for joining our panel tonight. I'm going to give a brief introduction to the topic. Following that, we have a set of kind of pre-scripted questions that I'm going to pose to the panelists. Whoever wishes to chime in on a given question will do so. And then after about 45 minutes or so, we're going to open things up to the audience. And so be thinking about some questions that you would like to ask. When we do get to the question and answer, I would ask that you be brief and to the point, that you actually have a question and rather than a lengthy ovation. And that will allow more time for others to get their questions in. So let me say a little bit about the history of these two current regional trade negotiations in which the U.S. is engaged. Negotiations on what is now called the Trans-Pacific Partnership began in 2005 among New Zealand, Chile, and Singapore. Since then, 9 other countries have joined the negotiations, including the United States, Japan, Brunei, Chile. I mentioned Chile, actually. I think I might have missed a different country rather than Chile among the original 3. But in any case, we have U.S., Japan, Brunei, Chile, Mexico, Canada, Peru, Vietnam, Australia, and Malaysia. So 12 countries in all. Since 2010, there have been 19 rounds of negotiations, including one that just concluded mid-October. It was expected at one point that negotiations would lead to a completed agreement in 2012. That kind of deadline has now long passed. final agreement has been postponed due to disagreements over some of the issues that we'll be discussing tonight. And so negotiations, it's unclear exactly when negotiations will be concluded. The other agreement that's under discussion is the Transatlantic Trade and Investment Partnership. Negotiations began in early 2013, and they involve the United States and the countries of the European Union. There are 28 countries in the EU. That negotiation as well is ongoing. Both sets of negotiations, of course, involve market access issues, lowering tariffs, removing other barriers to trade in goods and services. But they also include a variety of other topics: intellectual property rights, rights of foreign investors, currency manipulation, capital controls, regulatory convergence, competition policy, state-owned enterprises, and trade dispute resolution. So these are much more than just trade agreements. They encompass quite a broad array of economic issues dealing with relations among countries. So with that as a bit of background, let's delve into some of the particulars, and perhaps we'll begin by just asking, why have bilateral and regional trade negotiations become so attractive to states? Why these are two big negotiations, but there are quite a few others that have recently been concluded or are ongoing.
We're having to deal with the wired technology up here, so. Well, first I want to thank David and your center for inviting me here. David is also a Stanford graduate, so we have 2 Stanford and 2 Cambridge up here on the platform. And I also want to thank all of you for coming out, in spite of the fact that you're missing the first few innings of the World Series, first games. I think there's a couple of reasons why regional and bilateral or sort of small group negotiations have become so popular. One obvious one is the breakdown of the current round of negotiations in the World Trade Organization, the WTO. So it was launched in, I think, 2001 in Doha, and the negotiations broke down a long, long time ago, and there's no sign of any progress in that. So countries have been pursuing their own agendas, and in particular the US has had a lot of interest in this because the US has a lot of ideas about some of these non-trade provisions that Professor Skidmore mentioned, like the investor-state dispute resolution and various issues of intellectual property rights and other property rights, which we will discuss later. But these have not been accepted by a lot of the BRIC countries, the leading emerging market nations, in the multilateral forums. But the US has more, at least with developing countries and smaller emerging market nations, the US has more leverage. Now with Europe, it's actually interesting because they're a more equal power, and there may actually be more resistance there. But I think that's the fundamental reason. And then the other reason is the market access, that countries are sort of competing to get advantages in the US market or the European market or other big markets like Japan. A lot of countries in the Pacific region, like the Latin American ones who are in TPP negotiations, are interested in diversifying their exports to Asia. So everybody's trying to get a little leg up, but that said, the trade barriers between all these countries are actually fairly low to begin with, so that may not be, there are exceptions in particular countries and sectors where trade barriers are still high, but for the most part, that may not be where the biggest action is. Oh, and I should mention, quite a number of the countries in TPP already have free trade agreements with each other, including the US with 5 other members of the negotiation process.
If you look at the structure of WTO with 160 countries, everything would have to be rationalized and accepted by each country, often going to a parliament or a congress. So it's kind of understandable, as Robert said, that it's got bogged down. I thought it was very interesting that really kind of the end of the Doha round so far anyway was about 5 or 6 years ago when President Lula of Brazil said, unless the developed world effectively gets rid of agricultural subsidies and protectionism and lets in product from the less developed world, then this really can't go forward. And I think that's kind of almost the end of the current phase, at least, of the Doha round. It's just hard to see with 160 countries how anything can get through. Whereas, the transatlantic one is actually in a way a bilateral, because the European Union, although it's, as Robert said, 28 countries, it has a unified intra-group trade protocol, which has been going for a long time and has actually been very successful. Before they started messing around with currency union, the EU was actually very successful and very popular. It's the negativity has really all happened because the currency union wasn't well managed, and I can't imagine that anybody would claim otherwise. So, free trade within the EU is something that actually has a pretty decent level, at least, of informed support. So I think it's really just the workability of doing things in a smaller, more like-minded group.
So you have, instead of a universal organization based on consensus, the WTO, you have more like coalitions of the willing. However, from an economist standpoint, global trade liberalization is the gold standard. And so a follow-up question is, do these regional trade accords complement, or do they in fact undermine success in global liberalization?
I'd actually like to start on that one by pointing to Chinese accession to the WTO back in 2001, when, by the way, the WTO had a good track record of getting things done. Before Doha, the previous rounds with the WTO and with GATT tended to have limited objectives, mostly around tariffs, and they came to an agreement. China's accession to the WTO in 2001 was seen as very important. I would point out, though, to the 90s, China was gradually, on a limited basis, liberalizing its trade. With its export-led policies, it was important for it to do that. And so actually, in the case of China, these limited and local agreements paved the way for its accession to the WTO, which I think is historically quite interesting and suggests that actually this phase of bilaterals and regionals may actually ultimately strengthen the global system.
Yeah, I think that's an important point, because it kind of, if you extrapolate from it, kind of, you've seen the Big Bang neoliberal sort of theory that dominated, I suppose, policymaking in the 90s. And I think actually, if you step back for a minute, what Jim said actually makes a lot of sense, because if you're a country which has trade barriers in place, wants to remove trade barriers, wants to liberalize, the last thing you really want to do is remove all the barriers immediately and expose all your industries, your labor, and your internal political opponents to make hay with that kind of strategy. So actually doing it incrementally, I think, is much more accretive to the end game of getting a much more open system than trying to do it in all one massive system shock. I think it's proves to be kind of counter-effective to what you're trying to do. So I don't think it necessarily runs counter to having a globally transparent, open trading system, actually.
Well, just to stir up a little controversy. So I think I agree with all the things you all said, but one of the things that's going on, I think, is that the U.S. has a very strong agenda in some of those non-trade areas that Professor Skidmore mentioned. And the U.S. was not able to get its way on that in WTO. Brazil was, for example, not only upset that we wouldn't more open our agricultural market, or the Europeans, but also they were very resistant to U.S. initiatives on things like intellectual property rights and dispute settlement. And I think the U.S. sees certain situations where it will have more bargaining leverage, for one thing, but offering access to the U.S. market, the biggest market, as the lure. But also the U.S. wants to set precedents for future multilateral negotiations and other bilateral negotiations. So just as NAFTA was a precedent for later trade agreements like CAFTA and the Korea agreement and so on, they changed a little, but they were very important precedents set, and that already included things that were not in the WTO agreement. So I think there's a sense in which the U.S. is trying to create a kind of club of members, this sort of coalition of the willing, who's willing to accept the U.S. position, and then for the BRIC countries and others of like mind, they're going to find themselves excluded from the club. And I think the U.S. hope is that eventually they'll have to come to the table and negotiate on U.S. terms, which up until now they have not wanted to. So that's going to be an interesting thing
That will be
going
very
forward.
interesting.
So that raises another set of questions about who, how did the composition of these negotiations, how does it evolve, and who gets to be part of the club, as you put it. In the case of the Transatlantic Trade and Investment Partnership, there's a certain logic. It's the US and then it's the EU that tells you who will be included, but even there are questions. Turkey, for instance, would very much like to be able to join in the agreement. And in the case of the Trans-Pacific Partnership, though, it's more interesting because, for instance, China is not included in these negotiations, and it's a huge player in Pacific trade. So that raises the question, for instance, why isn't China included, do you think? And how is the TPP related to the Obama administration's pivot to Asia and broader geopolitical interests in the region?
It's interesting, David, to think about. You mentioned Turkey. Remember, the free trade element of the European Union, or the European Economic Community as it was called when it was purely a free trade area, was built around 4 freedoms. It was the free movement of goods, people, services, and capital. So, people movement. One of the fundamental principles of the EU is people can move anywhere to work or to live within the EU. It's a bit like the US. Turkey's a problem there because it's a very big country, relatively low income compared to the rest of Europe, and with potentially, as we're now seeing, a very significant refugee problem if things continue to go wrong to their south. For those reasons, I think there's no chance that Turkey will be admitted into the EU in the foreseeable future. That's a big source of regret to them in their desire to trade freely, but I think that that's one of the reasons for exclusion. The other one, I think, is a much more benign one, which is, as you described it, David, the TPP started off in a very small way. Really small countries, New Zealand, Chile, and Singapore, and then Brunei joined in. I think it was basically four before the other 8 came along. Those are all small economies. It really took, when did the US join in? Was it 2008? I think it was. It was something like that. So the US was kind of almost an afterthought. It wasn't a US project to start with. And China has until recently been reluctant to put itself forward to join in because it doesn't like that non-tariff agenda that Robert was talking about, which I think is actually very fundamental to free trade. I think the regulatory agenda is very fundamental for reasons we could go into later. But I think China didn't really have the will to join, and then it became TPP was accused of being a US sort of Monroe Doctrine type of project, but the Americans have been very clear that they actually would like China to consider joining more recently. So I think it's just a matter of evolution and history in the case of TPP.
Anything to add?
Not right.
I will mention that China initially was very critical of the TPP, and but more recently has shown some signs that they may be interested in joining negotiations at some point at a later stage.
Well, let me just add a couple things. I went to a forum in Washington a few weeks ago, which was allegedly about big issues on the TTIP, that's the one with Europe, but it ended up being almost entirely about Turkey, which is a bit of a unique case because it's an emerging market country right on the border of Europe, which has been wanting to get into the EU, and for the reasons you said, probably won't. But there's a lot of other emerging market and developing countries that could be adversely affected if a club is created and they're not members.
Yeah.
And so I think one of the reasons like that Mexico and Peru joined is simply that they already have free trade agreements with the US, they're interested in Asia, but they don't want a new deal to be cut that they'd be excluded from and lose advantages that they have, and they want some influence over what comes out. But then take, for example, the Central American countries. So they have a free trade agreement with the US. They're very afraid of, that's one of your later questions here, David, of trade diversion. That all of a sudden, Vietnam, for example, might have advantages if it gets into, if TPP is created and they can import textiles and fabric cheaply from China. Maybe the rules of origin would be less stringent, so that Central America has actually had quite a boom in exports of apparel. Probably half you are wearing something assembled in El Salvador or Honduras, but it might be assembled in Vietnam instead, and there could be job losses in Central America, and they're not included. And then this is one of the odd asymmetries, by the way. You mentioned, in Europe, the one organization, the EU, negotiates for everyone. Now, the US is part of what's called the spaghetti ball. We have trade agreements with lots of other countries, and some of those have trade agreements with each other, but we're not a customs union with anybody, except our 50 states with each other. But so we don't negotiate on behalf of, say, Mexico or Canada, even though we're all in NAFTA. And we have a free trade agreement with Korea. They're not even involved in this for reasons I actually don't understand. But it's very odd, and it creates this kind of constant competition among countries of who's going to have the best market access, and the fears of a lot of trade diversion. That's why other countries, even if they're not in the process, are concerned. And the last thing is that I think there's been some sense that some of the countries are actually interested in TPP, the Pacific one, as a lever against China. So Vietnam has a long history of antagonism with China. They just had a little skirmish out in the waters last week, and they would like more of an alliance with the US in spite of our little political history that goes back some years. So there may be some countries that really don't want China in the agreement, and it's probably not uniform about that.
But, so at the risk of diverting you from your next question, David, I do want to comment on something Robert said a while ago, which is about the non-trade or apparently non-trade agenda of the WTO, and to an extent of both TTIP and TPP. Intellectual property is a big part of that. This is not a trivial issue. This is actually the most controversial issue currently on TPP. The US within TPP apparently, although the publicity around the discussions is not totally clear, apparently has been pushing for basically drug patents to last for 12 years. In Australia and New Zealand, there's very common use of generic drugs which are off patent long before that. And the big cry coming up in Australia and New Zealand is the American agenda on TPP is going to make our healthcare a lot more expensive. That actually is, I think, a legitimate topic for debate. How long should the intellectual property, the patent rights on drugs be protected? I mean, it's kind of obvious they have to be protected for a while to maintain the incentive to do the research and create the drugs. It's kind of obvious also that they have to come off at some point. But this seems to me a legitimate political debate that kind of has to be solved if trade has to get to work by more coherent rules. And I'd probably just finish this comment by saying, I mean, I've been in different kinds of markets all my career, from the stock market to the bond market to working economically on things that are less obvious, like real estate and trade. To me, the clearest thing about markets is they only work if there are clearly understood rules of conduct. I very early in my market career was told that the fundamental rule is always remember you'll want to do another deal tomorrow. And that actually is the fundamental thing that makes rules in markets tenable and workable. And these intellectual property rules or the agricultural preferences or whatever, those are not trivial things. They're actually major public interest issues in the countries involved. So I actually welcome the fact that in TPP and in TTIP there is a vigorous debate about those things. It kind of got stalled in WTO, and my belief is it has to restart. But having said that, it's a pity it's restarting just with the developed world, because it's going to be very important to get the developing countries finding something that they're comfortable acceding to.
I think, Jim, what you said is really important, and I can kind of personally attest to that, having grown up in a developing country. These things are not only fundamentally important, but actually emotionally and culturally very, very important. I think people tend to overlook that when they get into trade and sort of other negotiations. But I would tell you that there are going to be certain issues, at least from my perspective, that are going to be very, very hard to resolve, and perhaps they don't get resolved, right? Things like, and I'm sure we'll talk about that shortly, food subsidies, intellectual property rights, there will always be a difference of opinion. I mean, I don't see it ever being resolved, ever possibly, that you have complete and perfect harmony on a subject that's going to be very hard to resolve. So I think we have to go into that with eyes wide open and recognize that there are differences of opinion, and that's not always a bad thing.
So certainly markets need rules and institutions to operate, there's no question about that, and some degree of intellectual property rights is essential in a market economy. I totally get all that. And some parts of the non-trade agenda are linked to trade. But let me try to lay out the case for why some of the things that are at least allegedly in the negotiations, we don't really know because the negotiations are quite secret, and I think that's one of your later questions, David. But according to the rumors, leaks, and surmises based on other negotiations, a couple of points. So one is that this issue of the patent protection, especially for pharmaceuticals, is really important because it affects public health and healthcare costs, which we know are an issue in the US and many countries. But the basic theory of free trade, going back to Adam Smith and David Ricardo, is that if countries specialize according to their, as Ricardo put it, comparative advantage, it should end up making goods and services cheaper for everybody everywhere. Well, if you're going to force countries to increase the length of their patent protection, it is going to make certain things more expensive for consumers in many countries, and especially in poorer countries like, say, Malaysia, Vietnam, or Peru, or somewhere. And to put that under the guise of so-called a free trade agreement, I just think is very questionable at best. The other thing that I think is really not related to trade, and it's sort of the Trojan horse in this, is some of what I think are the excesses of the investor-state dispute resolution mechanism. Now, granted, you need dispute resolution about trade issues, but it goes beyond trade issues. And here NAFTA was the precedent, and it's gone into a number of other agreements. But a provision was put in NAFTA, and there are similar ones in later agreements, and supposedly the US is seeking this in these two new ones, whereby foreign investors, of course under GATT and WTO, they should get national treatment, no discrimination, but this goes beyond that. They are given a property right in potential or expected profits, where if any regulation or law, say environmental or consumer safety or whatever is, financial regulation might add, is passed, and it might impinge on the profits of those companies, they can sue in special tribunals outside of regular court systems for monetary damages, and some quite large damages have been awarded under existing dispute resolution like this in NAFTA and various other agreements, and it's quite controversial. But let me just make one point. It goes beyond the property rights that exist under domestic law in the United States or pretty much any of the other participating countries. So you can't claim these lost profits under US law in any US court. I mean, you can claim it, but you won't win. But if a US company says that, say, a regulation by a Canadian province or a Mexican state or the Central American countries, since we have CAFTA, simply would reduce their profits, they can get a monetary damage. I don't think that's necessary for free trade, and I think if you want to know why these negotiations are taking so long, the Europeans are said to be very resistant to this. The Germans have actually been quite public, and this is a country with advanced, institutions and property rights and a democratic government. This is not some little third world state. The Germans are very reticent about this. I would guess the Japanese are also. And so, the US is not negotiating now with just smaller countries. It's negotiating with other major powers, and they are very, very resistant about this. And I think that's probably one of the things holding up the negotiations.
Yeah. No, it definitely is one of the things holding up the negotiations. And I would argue, for example, on the pharmaceutical one, that the US may be overreaching and wanting excessively long patent protection to protect the profits of pharma companies for a very long time. I think that the sort of Chinese approach, where intellectual property is not respected and half of what they produce is fake, I don't think that's a real exaggeration. That's not acceptable either. So the right answer has got to be somewhere in between. which is hopefully where this diplomatic process leads.
So the panelists have jumped ahead to some questions that we had later on planned, but which is fine. Let's go back though to an issue that was raised earlier in passing, and which is we are operating under a veil of ignorance because we're talking about what we think countries' positions might be on some of these issues and what the negotiations entail. When in fact, aside from leaks, as Robert mentioned, the negotiating process has lacked a great deal of transparency. And so, even I was listening to Congressman Sanford Levin the other day on a podcast. He's one of the top congressional experts on trade policy. And he was complaining because with these trade agreements, yes, he is allowed to go into a room and look at the negotiating text as it currently stands, but his staff are not allowed to actually see the text. It's that secretive. And of course, he needs his staff to be able to do the work. So people in Congress don't really know what even the US negotiators are really doing. So the question is, why so much secrecy? Is the secrecy justified? And are there some groups who in fact are inside the process and are consulted in, and who are those groups and how do they get chosen?
Gosh, that's a big one. I would say that I think there are always interested parties, I guess, phrasing that, and you might consider an industry an interested party, right? And I think there's obviously a huge case to be made for transparency, but sometimes transparency can get in the way of efficacy in terms of being able to push an agenda forward, and then of course make it transparent in a way that makes sense. So I think there might be a case for pushing negotiations to a point where you can get work done more efficiently and then open it up to more public debate. I think the danger of making it completely transparent from the get-go is that it allows for a lot of noise to come in from outside, and that might taint the process of negotiations. However, that's only my view. So I'm clearly not making decisions here, but I think there's a role for having some level of delicacy around negotiations.
At the risk of sounding a bit like Julian Assange, I tend to think that secrecy in government is usually a cover for corruption and incompetence. That's my personal view anyway. Robert from Washington may have a different view. But having said that, I'd love to see more transparency, but a lot of this stuff that's being debated could have quite a big commercial impact on companies. And there is a necessity to keep some of that a little bit under wraps, because the debate could get quite heated in various directions. But I think the case for secrecy is very tenuous, and my own view is there's been far too much of it.
Well, it sounds like we have quite a consensus here on that. Look, some amount of closed-door negotiations is understandable because governments are going to do a give and take in negotiations, and they don't want a position they take one day and maybe they change it, to get out in the public. You can understand all this.
Yeah.
But at the same time, I think I agree, it's gone too far. And I think the worst part of it is that we don't even know what the fundamental objectives of our own governments are. I was reading a paper by a Mexican colleague of mine in which she talked about that we need to use, magical divining and speculation in order to know what's happening. And yes, you have to go to WikiLeaks to find out what might or might not be happening, if you can trust it. And I don't think that's right. And I think issues like how much should we push on these patent rights or the dispute settlement, or should we open the agricultural sector more or not? These are really important matters of public policy.
Yeah.
And the public in the democratic process ought to have a say on that, even if we don't know the nitty-gritty of the negotiations. But I think the big picture should be much more transparent.
Well, maybe there's a point I'll insert now, even though I want to come back to it a little bit later, and that's that previous negotiations have taken place under what's called Trade Promotion Authority, or was once called Fast Track. And we'll get into what that means in more detail later, but one element is that when Congress passes Trade Promotion Authority, it is actually giving a set of negotiating objectives to U.S. Executive branch negotiators, right? They're setting the parameters for what the U.S. ought to seek to get out of the negotiations, and also what they don't want to see in an agreement. And in that way, Congress has a role in sort of the takeoff, which makes at least possible that Congress, when an agreement arrives at them, are not going to be totally surprised, and the accord may have a better chance of passage. Since we don't have Trade Promotion Authority in effect right now, the executive branch is out negotiating without any guidance from the Congress as to what objectives ought to be included, and without any buy-in at the front end on these negotiations. So I want to mention that now. Let's bracket it, because I'll come back to TPA later. But we'll talk about, can we get this through Congress? So we've talked a little bit about the non-tariff or non-trade agenda, the IPR, the investor state dispute settlement. Another question that always comes up with trade agreements has to do with jobs. So will trade agreements like the TPP and TTIP be likely to create more jobs in the United States, or is it possible that multinational corporations will take jobs overseas through more outsourcing? Are there any lessons from previous trade agreements like NAFTA that can help us anticipate possible effects on jobs here in the U.S.?
I would say to that one that I have absolutely no doubt that the net effect of any effective free trade agreement is to grow more economic activity and more jobs. Comparative advantage does work. It's not only a good theory, but we've seen it work. For example, the whole development of the EU was an enormous impetus, at least before they started going wrong with the currency, was an enormous impetus to prosperity in Europe because of the increase in trade and the exploitation of comparative advantage. So I have absolutely no doubt that it leads to more jobs. The problem is that it doesn't lead to more jobs for everyone, and it does put in place those who have a comparative disadvantage. They are under pressure. Any kind of free trade has winners and losers, and it's politically accommodating and softening the blow on those losers in a free trade agreement is actually one of the key political issues, and it's one of the key political issues of our time, actually. It's why, the whole Occupy movement and anti-globalization became such a popular force, because there are some people who always lose out when trade gets opened up. Now, politically, I think the European approach is to soften the blow with welfare. That hasn't been the US approach, and it's one that I think will need to be thought about if and when the free trade agenda gets back on course.
Just to add to your point about NAFTA, actually, if you look at the impact of NAFTA, there was actually an addition of net jobs to this country. So from just a empirical perspective, there's been, I think, very little evidence to show that signing or participating in free trade agreements actually does any long-term damage to economic job creation. Having said so, I think Jim's spot on that it does lead to dislocation. It will lead to inevitable dislocation as skills get substituted or jobs get substituted. However, having said so, that, in my view, is actually an opportunity to move up the skill space, as some countries have done so, and it's actually happening in this country in some industries. So I think it's an easy and emotive argument to get swept up in, obviously, because at the end of the day, it's economics, your jobs are at stake. But I don't think, objectively, if you look at numbers and statistics, and that's not a nice thing to say, but net jobs don't get actually lost because of free trade agreements.
So I'm going to have to stir up some controversy again. So first of all, I think the administrations since at least George H.W. Bush and Bill Clinton, this is bipartisan, have made a huge mistake in selling free trade agreements as job creating. Just obviously ignoring what you just said about the churning and the imports and the fact that other jobs are going to be displaced. And if you look at the propaganda, and that's the only word for it, of what the USTR, U.S. Trade Representative Office, puts out, they count jobs associated with imports. They never, sorry, with exports. They never talk about imports, which are also going to increase if you have freer trade. And so it's just not credible. But I would disagree a little bit about NAFTA and more about other things. I think, different trade areas are very different. Europe is one story, is a very different case. But there's no question in my mind that the lowering of trade barriers and other changes that have facilitated globalization, it's not all policy, a lot of it's technology and shipping and communications, but there has been a huge amount of outsourcing of jobs out of the United States, and the job losses really add up to the millions. The number of, 80% of US trade, at least in goods, is in manufacturing. Manufacturing employment has shrunk by about 5 million since the year 2000. That's a fall of somewhere in the order of 30%. It's not small.
No.
The big change did not happen right after NAFTA, and the changes with Mexico, we could debate them. I think they're slightly negative, but they're relatively small. The big change was when China joined the WTO and got so-called permanent normal trade relations, or most favored nation in the US. After 2001, Chinese exports to the US just absolutely mushroomed, and credible estimates of the job losses, even by mainstream neoclassical free trade economists, are up around 1.5 million, and by the Washington think tanks that are more anti-trade agreements, they're 2.5 million. Now, I don't know, you can split that difference if you like, but it's huge. So in just the first 5 years of China being in the WTO, 3 million manufacturing jobs were lost, 2 more have gone since the financial crisis and the Great Recession, but they simply haven't come back. Output is back up. It's almost all because of productivity growth. There's been very little recovery of employment, and yet you do see jobs rising in whether it's the Mexican auto industry or somewhere else. Now the interesting thing is, and throw a little bit of NAFTA in, when NAFTA was sold to both the American and the Mexican publics, it was sold with the promise that it would actually create tons of jobs in Mexico. It was going to raise wages and living standards there so much that the Mexicans would be so rich and so well paid and so employed that they would no longer want to migrate to the United States. Well, that was 5 million illegal migrants ago. It didn't happen. Real wages there, adjusted for inflation, have been basically flat since NAFTA was created. The net increase in manufacturing employment there over the last 20 years is on the order of about 400,000 jobs. It's not a huge number. Their labor force grows by 950,000 people a year. And in 20 years, they created at most 400,000 manufacturing jobs. Why was it so disappointing? Partly, they also lost out to China after 2000. Partly, it's because the nature of the jobs changed, or the industries changed. Everybody thinks of a maquiladora as some plant where Mexicans stitch clothing together. That's not in Mexico anymore. That's in Central America or Bangladesh or somewhere else. The typical Mexican export industry now is automobiles, aerospace, electronics, electrical machinery and equipment. These are high-tech, high-skilled industries, and the good news is they create jobs for educated people in Mexico, but the bad news is it's not nearly as many jobs as were expected based on expectations that it was going to be lots of labor-intensive industries. So, the job creation has often been disappointing. In Mexico also they had the kind of gains and losses that you spoke of. So while the workers in those industries who got jobs benefited, many domestic industries that were admittedly quite inefficient, but they've shed hundreds of thousands or millions of jobs in sectors that were not competitive. And guess what? Migration continued. So these are huge impacts. And yes, some of it is gains and losses. Some of it is net losses due to outsourcing. But it has an enormous impact. It has not brought the widespread benefits that it was sold as promoting when some of the previous trade agreements were put forward.
I got to come back on that one. I got to come back on that one. It's true, Robert, that we lost about 5 million jobs in the US in manufacturing in the last 15 years. I would argue that's got very little to do with free trade and a lot to do with technological change. The amount of automation means that we're producing more manufactured goods with many fewer people than was ever the case before. And I see this as part of a transition from manufacturing to services that really is happening regardless of the free trade agenda. And I draw an analogy with that with agriculture. 200 years ago, 80% of the workforce was growing food. We needed that. What's happened? The productivity has gone up, and maybe 3% or 2% of the workforce is growing food. That's all we need to do it, and we're better fed than ever, probably too well fed. The same is true in manufacturing. The productivity rises have been such that the amount of basic manufactures you need are produced with a very small part of the labor force. And that releases people to do things that are perhaps, in a way, in a modern economy, higher added value, whether it's creating software or other services, healthcare services, or whether it's running nice restaurants. The economy becomes bigger and more prosperous, and that actually is, I think, inevitable, regardless of free trade.
So let's, do you want to come back on that again?
Well, just a little bit. You're absolutely right that technology is a huge part of the story. Not only automation in the production process, but technology has also facilitated globalization. So one of my colleagues at American University, on to tell AU, Daniel Bernhofen, has done some work on the impact of containerization in promoting trade, and it's really quite huge because he measures it better than other people have. So I don't doubt that that's all true, but when people get released from these activities, unfortunately, they don't all end up as computer programmers, aerospace engineers, or running a really trendy restaurant in Des Moines, which, by the way, is just the hippest place in the country, according to the latest press reports I've read. So I'm glad I'm here. The data are quite clear that, on average, the people end up with lower incomes, often protracted periods of unemployment. Now, it may be partly that they don't have the right skills for the new sectors, but it also may be that the job creation in those sectors is not so rapid, or that a lot of those jobs are just low-wage, dead-end jobs. So it's not an easy transition. So when you learn economics, and I teach all this stuff, in the textbook, it's very beautiful. You move from point A to point B, and it's more efficient, and no one suffers anything, but it's really, these adjustment costs can be quite long and protracted, and there are, income losses for a lot of the people. They never get back to the income level they had in that industry that was there before. And so it's not always a pretty process. And then you made actually a really excellent point earlier, Jim, right? Which is that in Europe, there were social mechanisms to deal with these adjustments. In the US, we really haven't had enough. Now, we have something called trade adjustment assistance, but it's really quite spotty, because to prove that you lost your job because of imports instead of something else, which you have to prove to get this assistance, is quite difficult. And even so, it really shouldn't matter why you lost your job. I mean, this is a social problem. It should be to help people adjust from any kind of change, whether it's technology or trade. So we don't have those things in place. In the poorer countries like Mexico, they don't have that in place at all. They have a social welfare policy. It's called emigrate to the United States, cross the border. That's the welfare policy. So unless we address these problems, then I think some of the urge to go slow in these matters may have a rational foundation.
Just 2 points.
Okay,
just
very
2 points.
quick.
I think I have to go with my boss here, but
You don't have to.
no, actually. But I think what Jim said is really interesting. A couple of things to what you said. If you just look at the size of the U.S. economy compared to where it was 13 or 14 years ago, we've clearly expanded, right? A lot. And you compare that to any other economy, for example, a developed market, we've done clearly better. Just looking at GDP.
You have to admit, Europe is not a case you want to compare. It's a pretty low standard of comparison right now.
Or Japan.
Or Japan, or whatever. But pure GDP suggests that the economy is actually benefit. The second thing is actually what has happened. I think I agree with you that a lot of folks have been displaced, and I think what's happened is income inequality is increased in this country. What it means is you have a bunch of people, highly educated, skilled people who are actually, continue doing really well and who are benefiting from globalization. So I mean, I think it's unfair to just view globalization as being negative for everything. I think there are a lot of positives for globalization, and you see that income disparity is one of the problems, I think a problem in this country, but clearly there is an element, educated, globalized part of this country that has done very well.
You know, you were talking before, I think I'm wary of bringing this point up because it's a whole nother panel we can get into. But it does bear mention perhaps, you were talking about productivity as a reason why you know, we can have more manufactured goods with fewer people. And yet, if you go back the last 10 or 15 years, unlike the previous 40 years, where as productivity rose, wages rose, you know, in sync. In the last 10 or 15 years, you see this divergence. Productivity has continued to rise, you're right.
It's longer
But
than
wages it's longer than that. Wages have not risen very much, and this gets to the inequality. I'm not blaming this on trade, but I'm saying it creates an environment in which people feel insecure and don't have as much hope in the future, which may make them less willing to take risks, like open up the economy.
No, that's certainly true, and you know, quite often you'll hear policymakers say things like education is the answer to inequality, and I don't really believe that's entirely true. I actually think there is a need for some economic solutions here, some regulation of the market or some market conduct that will actually lead to less inequality. I have had a few arguments recently about the minimum wage, for example, where the economic orthodoxy is that raising the minimum wage is a bad thing because it prices people out of jobs. I actually take the opposite view because I don't think the elasticity of demand for labour at the minimum wage is all that high. And I actually believe that if you increase the minimum wage, as they have done in comparable countries like Germany and Britain, then you will actually end up with a boost to the economy because those minimum wage people will tend to spend the incremental economy, as well as a reduction in inequality. So while I may be more for the free trade and market agenda, that'd be one place I would nuance slightly as a potential policy that is actually useful in getting rid of some of that inequality.
Well,
Since you were asked about that, I'm actually more comfortable in saying how trade can be tied to inequality than how it's tied to employment. Because employment depends on so many things: technology, macro policies, recessions, financial crises, exchange rates, you name it.
Yep.
But we have a theory, this one's in the advanced graduate course, called factor price equalization, and there's something related to it really technical called the factor price insensitivity lemma. But let me make this as simple as possible. When you're in a globally integrated economy, what basically happens is that factor prices, which means the wages for workers, the returns to capital, the rents of land, become determined by global factor supplies. And so once you're in that integrated environment, which I think we increasingly are, when you increase whether your capital stock through investment or your supply of educated workers, you don't change the factor prices because they're determined by how much labor there is in the whole world. Now, of course, we don't really have an equal wage with China. It's still higher, but they're rising, by the way. It is closing the gap. But I think it becomes much harder to move factor prices, at least for workers, in this globally competitive environment. And there are studies that have looked into that element. So it's a very tough nut to crack.
Yeah, it is, which is one of the arguments why I kind of like a higher minimum wage personally, even though a lot of people who do the kind of things I do would be adamantly opposed to it.
well, on that left-wing note, principal economist, I'm going to skip our final question so we can have a chance for the audience to ask some questions. If you'd raise your hands, it'd be great to get a student first. Yeah.
All right. I have two questions here. So how this TPPA will assist the other countries, those in partnership? And the second one, how the US going to make sure that it will not only US who will benefit in this TPP, but also the other countries.
Do you mean other countries that are
The other,
Yeah.
part of the agreement,
Yeah.
or other countries that are not part of the agreement?
In the agreement.
in the agreement, okay, the other 11 who are in with the US in the TPP negotiation. Yeah. I actually think the key to this is where you come out on questions like the drug patent discussion we were having earlier. And you know, ultimately I'd like to see the debate come out with an agreed length of the patents, which will be rough justice, and it won't be the 12 years that the pharma lobby wants and that the US is pressing for, because that would raise healthcare costs in countries that are perfectly happy with the system they've got right now. So, you know, this I think is the kind of compromise that would need to be made in order for a partnership like this to work for those countries and benefit all of them. And it is, you know, quite difficult if you look at, say, you've got Australia in the TPP, a commodity producer, you've got Vietnam, a commodity consumer. That would tend to mean that there's got to be compromises in terms of the terms of trade, the rules of trade in commodities. But those diplomatic compromises are very important, which is one of the reasons why I instinctively don't like the secrecy that's been going on. Most of these countries are, to a greater or lesser extent, democracies. There is, I think, a genuine political agenda here in having people understand, or at least informed opinion, understand the basis on which these compromises are being reached. I'm fairly optimistic this could be done, but it's going to be an arduous process.
Yeah, and I would add that there has to be give and take, right? If the US wants certain things granted to it, then it has to recognize that the other countries in partnership or potential partnerships will want something in return. I think that's one realization that has to be made. Otherwise, this will really just spiral around and around and around. And at this point, I think it's not 1950s, 1960s. It's not just a unilateral world anymore. I think that has to be recognized too.
You know, one of the problems with these kind of trade-offs, though, is that it sounds, you know, the U.S. would like Japan to open its agricultural market, and Japan would like the U.S. to remove restrictions on auto part imports.
Yep.
Well, that sounds like a great trade from a kind of distance. But the auto parts manufacturers in the U.S. might not think it's a great deal, and the farmers in Japan might not think it's a great deal. And so, and they actually have some sway in their countries. So.
Yeah, they do. And you know, this is all where you need a political compromise. If I look at the long now history of the European Union, the French take much the same attitude to their agriculture as the Japanese do. I mean, I'd argue in both countries, the food they eat and how the agriculture is organized is almost religious in the fervor they have for it. And yet France has managed to stay in a working free trade zone with UK, which takes a more American approach to things, through a whole series of compromises and through some, I think, on the trade front, pretty well thought through political negotiation. Same on the auto parts. You know, ultimately the comparative strength will have to lead to compromise.
Questions? More questions? Yes, sir.
With the propagation of open source software and hardware and the makers movement, what kind of effect is this going to have on the whole situation?
Well, people who use open source are doing so under an open source agreement that they'll share their modifications to the software. That's a voluntary arrangement they entered into. So I'm not sure that, you know, they obviously have made the judgment that they'll share their intellectual property for the greater good of what they obtain from it. I think that's a free exchange. So I don't see why they wouldn't do that and why others wouldn't create software which they regard as protected intellectual property. I think it's consistent.
In my surfing around the web for wild allegations, leaks, and possibly misinformation, I have found accusation, and that's all I can call them because, again, we don't know what's really going on, but that there is some pressure to tighten copyright restrictions and the enforcement of those through internet providers. And even to the point where, according to some critics, and maybe this is the hysterical part of the website, but even your local coffee house, if you download something illegally in your coffee house, the coffee house owner could be liable. I don't know if it really goes that far. But there are definitely some issues about that and how that could restrict use of the internet and everything. I don't know that open source and stuff is particularly.
For instance, there's an example of some young man didn't have a hand, and for $500 they made him a hand, whereas the orthopedic company would have charged an ungodly amount of money. I mean, those kinds of innovations are happening.
Other questions, sir?
What do you think is going to happen on fast track?
Well, it's definitely not going to be approved before the congressional election, but that's now a really safe prediction, because
Yeah.
it's only a few weeks away.
They're not going to do anything before then.
And probably unlikely in the lame duck session, because,
Yeah.
let's see, they haven't passed the budget again yet, have
Nope.
they? So they
Nope.
still have another budget crisis
Yeah.
to handle. Paradoxically, the press is saying that Barack Obama is going to be glad if the Republicans win the Senate just on this one issue, because the Republican Senate is more likely to approve fast track or
Yeah.
TPA. Oh, that reminds me, we never got back to that issue. So David mentioned a number of issues about fast track, but the reason it's been so controversial is that under this provision, by the way, Trade Promotion Authority was a repackaging to make it sound better. We do that a lot in Washington. I don't, not we, they. They, it goes inside the milk. But it says that once a trade agreement is negotiated and comes to Congress, it cannot be amended. It has to be voted up or down. And you can add things on, like worker adjustment assistance, through what's called the implementing legislation, but you can't change the terms of it. So here you would have something where you didn't have any input on the agenda, you didn't know what was going on because it was very secretive during negotiations, and then you get handed a fait accompli, vote yes or no, and oh, by the way, it's going to be a terrible disaster for our foreign relations with Asia and Europe, our key allies, if you don't vote yes. So then it's very hard to say no to this thing, which may have some really noxious provisions that you don't particularly like, and that you wish we had negotiated or accepted. So that's why it's controversial. And a lot of labor environmental groups, we've already heard the list, have been pressuring the Democrats not to approve this. There are also, interestingly, rumbles of opposition from the Tea Party and some libertarians, Cato and Institute, and that wing of the Republican Party, who are questioning this from a sovereignty perspective. Like they're not happy with some of the dispute settlement things. So it actually could be very interesting, but the expectation is that something will be voted on it in 2015, and then if it doesn't happen then, well, 2016 is an election year, as I guess you probably know in this state, so I think it's already begun here.
We started,
The rest of the country's not paying much attention yet. Yeah. So 2015 is the window where that will probably either happen or not happen.
Yeah.
And yet, one of the interesting things is that in Europe, in much of the Asian countries that are party, Chile, elsewhere, these negotiations are a major political issue. They are subject to ongoing public debate. They're in the media. They are controversial. People are organizing around them.
Yep.
When's the last time you heard a congressional candidate here in the United States talk about TTIP?
Yeah.
Or TPP.
Yeah.
Even though we're in the middle of election year, we're not having a public debate, and people are, for the most part, unaware that this is going on at all. So, that's a bit concerning, I think, because these are major issues that, as you said, should be debated openly.
With the amount of secrecy there is around TPP, for example, it would be essential that if we're ever going to sign up, not only do you get fast track, but you get more clarity and more transparency around it, and the ability for Congress to give the executive branch some guidelines for negotiation. It's got to happen that way. Otherwise, I don't think America could sign on to a treaty like that, because once it's amended, you have to go along to your 11 other partners in the case of TPP, or 28 in the case of TTIP, and try and negotiate it again with them. It's just not going to happen without fast track. And fast track requires a degree of transparency and the ability for Congress at least to give high-level strategies to the executive branch.
Yeah.
Yeah, it's a wonderful follow-on to that discussion. I guess my question would flip it a little bit. And what is the case for secrecy? Who's making the case? Does it protect the process from undue influence? And then would you mind, just discussing briefly the stakeholders and how secrecy either benefits or affects them negatively?
We did talk about this earlier, but if you have anything to add to that.
Well, I tend not to buy the case for high levels of secrecy unless it's on particularly company-specific or business-specific issues. And I think that should be drawn pretty tightly, because it does often cover up ugly stuff in the political process. And I think the drug patents one is one we discussed earlier. I think there needs to be a lot more transparency around why the length of patent is needed and how the negotiations are being conducted. I think one of the dirty secrets, it's not really a secret, I think we know it, is that with the amount of money in the US political system, K Street's become a lot more powerful. And that actually tends, in the cases like drug pricing, to subvert the public interest and to be excessive in terms of attempting to preserve monopoly revenues. Monopolies are one of the things that any thoughtful regulation of a free market, whether it's a national one or a cross-border one, monopolies and oligopolies do need to be regulated because you get market abuse.
But again, who's making the case for secrecy and who benefits as a result?
Well, personally, I don't think the case has been made. I think they've got into secrecy almost by default because it's how they've tended to operate. I certainly don't understand the case either. Although maybe Robert's been on WikiLeaks more than me.
I think that if it's kind of a chicken and egg thing. If there's an absence of public debate, it's easy to just go on with secrecy. No one's demanding that you provide transparency. But if at the same time you don't have public debate because being secret, people don't know about it. So it's a kind of feedback loop.
Well, certainly the excessive secrecy creates suspicions. There must be something to hide here, and so in a way, it's subverting its own case.
That's true.
But I do think that there are some people who do know what's going on. I think there is a close nexus between some of that. Now it's time, before the night ends, I have to do a little conspiracy theory between some of those K Street lobbyists and the USTR, U.S. Trade Representative Office. And I think there are people who are in the loop and they're influencing the negotiations, or they have friends in high places. I mean, there's a revolving door between the K Street lobbyists and some of the government agencies that do these negotiations. So somebody's influencing this, and we don't know who, and the more secret it is, the more wild the conspiracy theories will be, but who knows, maybe they have a point.
I'd like to see more political debate to this. I was struck while just reading around stuff this week. There was a piece by Boris Johnson, who's the Mayor of London, a possible successor to Cameron as the British Prime Minister at some point. So he's a pretty senior heavyweight politician. He wrote a lengthy and actually quite thoughtful piece on TTIP yesterday in the Daily Telegraph. It's kind of interesting that that happens there. You couldn't imagine the equivalent in the US doing that. And I think it would be a good thing if they did.
Sir?
I just had a question what your thoughts were in this country moving forward with continuing globalization and possible treaties being signed with trade. Will that continue to affect the income gap or is there any correlation there? Will it continue to get wider? Or, I know you spoke a little bit about maybe raising the minimum wage to help that somewhat, but do you see that continuing to widen if we do have more free trade agreements?
Well, I doubt whether it's uniquely associated with free trade. And I'd point to really in some ways the last time the US had a really big inequality problem, late 19th, early 20th century. What changed it was antitrust regulation. The busting of trusts, the breakup of some of the really big companies, the introduction of more regulated markets like the FDA, those were things that in the end caused a change in conduct in the marketplace and actually caused inequality to become less. Still there, but less. So I would guess that something like that has to happen if the inequality is to become less of an impediment to economic development.
If I could jump on this one as well. It is much more complex than trade. But it is also pervasive. It's not just the U.S. 80% of the world's people live in countries where the gap between rich and poor is growing wider internally. There's a book that came out last spring or summer by Thomas Piketty that...
Lots of people have bought, but nobody's read.
I've read it.
Oh, the first time.
Academics have time off over the summer, so we actually read things. So, but Piketty says that there's a kind of underlying tendency within capitalism for the rate of return on capital to exceed the rate of growth of the underlying economy, and that that tendency tends to drive greater inequality, concentration of wealth in the hands of capital. However, in addition to anti-monopoly, the mid-20th century, a great deal of capital was destroyed through the two world wars and the Great Depression, bouts of inflation in some countries, and there were also the New Deal type reforms, all of which tended to lead to, from a very high level of inequality in the US and Europe, to a much more egalitarian system after World War II. Since then, or since the 70s in particular, inequality has been growing once again and is almost, not quite, but almost at levels of the early 20th century. Now, the troubling implication of Piketty's analysis is that it takes world wars to destroy enough capital to push down inequality. Of course, that's not the way we'd like to do it. Yeah.
So, obviously this is a very complex topic for the reasons that have been stated, and it's not all related to trade. And in fact, in that previous era of high inequality, we actually had high protectionism in the US and in most other countries.
That's true.
Nevertheless, where trade agreements can play a role for better or for worse, well, I guess that depends on your viewpoint, but for more or less inequality, I think has to do with whether they are really doing a job as trade agreements in terms of opening up more competition, or if they have all of these provisions which are more debatable that actually may increase monopoly privileges. And so, you can't say trade or not. What kind of trade, what kind of agreement, what kind of provisions? The devil's in the details, but they're really important details. And so that's where this may play out. But the broader point about globalization and outsourcing, I do want to come back to that. I mean, in effect, workers in all the different countries have to compete for jobs now. Where will your clothing be produced? Where will your electronic goods come from? Will it be Central America, Mexico, Malaysia, Vietnam, Poland, Eastern Europe, Turkey, or wherever? And I think that is one of the things that has fundamentally held down wage increases around the world in many, many countries. But capital is much more mobile today. And so capital can go to where it earns the highest returns. Workers, well, they're somewhat mobile in the EU, but not in most places. And so workers are kind of stuck where they are and have to accept concessions or wages that don't keep up with productivity just to try to hold on to jobs. So in that sense, I do think globalization has fundamentally contributed to inequality, though it is still one of many, many things that are going on, and that's a very big issue going forward.
Yeah, I would just say though, there is an inherent disparity in just occupations across the world, right? I mean, if you were to make the argument, for example, that there is a different price being paid for a software engineer as opposed to an auto mechanic or an auto or whatever, somebody manufacturing something in China or Vietnam or whatever you want to call it. So there is an inherent price being set for a level of skills. Now, whether that skill gap is ever going to be closed, I don't know. But I think there's going to be an inherent level of inequality, whether there's globalization or there isn't globalization, that's being set by a particular price that you're willing to pay for a particular skill.
We've had one good. Any other questions? This gentleman here? Yes, you.
Because of this trade secrecy, we don't know who negotiate on behalf of our government. In your opinion, do we have some list of criteria who can be that negotiator on behalf of our government? You got what I mean?
By our government, you mean U.S. or what other country?
U.S. or Malaysia or Poland, whatever.
Yeah.
Do we have a set of criteria?
No, this is really a question about political legitimacy, which in a democracy, if you don't like what they're doing, you fling the bastards out. You know, that's basically the right answer. And political legitimacy comes from a transparent election process, and I think you need. That's why with fast track you would need to have Congress giving the executive branch some guidelines, because that way you get to something which maybe people can accept as a suitable compromise between the winners and losers. But it's really a question about democratic legitimacy.
Just two brief comments along those lines. One is that, as I understand it, although, of course, the administration doesn't have to have fast track to negotiate, they can go negotiate, bring it to Congress and see what happens.
Yeah, good luck with that.
Because before the 1960s, trade agreements and GATT were all approved without fast track. This was invented in the 1960s.
Yeah.
But what the Obama administration has said, I believe, according to my internet surfing, is that they're following the previous guidelines of fast track. Now, it expired in 2007, but it existed for a few years under George W. Bush. So they're essentially following that model, even though it was not officially reauthorized, but they claim that they are following it. But what has been really remarkable, you know, you all here in Iowa are about to hear a little bit of partisanship over the next couple of years. You've probably been hearing a lot already. But when it comes to trade negotiations, there's been, and this again is inside the Beltway K Street stuff, there's been remarkable bipartisanship. The negotiating agendas of the U.S. don't shift as much as you might think when the parties change. Yes, there may be a little more emphasis on labor rights under the Democrats, and that might get forgotten under the Republicans. But that's actually pretty much on the periphery of the negotiations anyway. These core things have been pretty steady sets of agendas from the Reagan administration through Bush 1, Clinton, Bush 2, Obama, and who knows if there will be a Bush 3, Clinton 2, or I don't know how many sequels we're going to have. So the democratic process, in some sense, doesn't work. There's like a permanent tradeocracy in Washington, entrenched in the USTR office, and in various interest groups that pushes an agenda, and it just keeps getting pushed. And Obama will talk about something out of one side of his mouth, but his trade people may be doing something else. And it's not all that different from what George Bush did or all the other presidents before them. So I don't know if this thing is being elected or not, but as several of the others have commented, it's really not getting that much attention here. You know, NAFTA was hugely controversial. You all were, if you're students, were very young at the time in 1993 or 94 when we were debating that. But since then, trade has almost gone off the U.S. political agenda. I mean, it comes up in every election, let's keep out some imports, but then it just gets forgotten. But there's not really a whole lot of serious discussion. I mean, in Germany, they're having a really serious discussion about the investor rights and dispute settlement issues. Americans aren't hearing about it, at least unless they read, the inside pages of the Wall Street Journal. But keep yourselves informed because there's a lot going on.
So I think we have time for one more question. All right, you get the last question.
So let's say if China create another kind of TPPA, it's like China like TPPA. So what would be U.S. direction regarding this?
If China China's talked about trying to create an Asian-centered regional trade agreement which would exclude the U.S. and the other American countries that are involved.
Yeah, I think that the US response would really depend on how they did it, because I think the US is always pretty pragmatic on these things. I think really part of the reason that China's not in TPP at the moment is that the rules, the basic ideas on free trade come out of open economies, and the Chinese economy, although very export oriented, is in some senses like capital movement, still very closed. So I think it's hard to see what the shape of a free trade zone or a TPP type initiative led by China would be. I mean, I think that that's kind of hard to discern, and I think the US response would really be very dependent on what the details actually look like. I do personally think, though, the Chinese paranoia that the US is continually trying to contain it is actually not really totally valid. I don't think the US is that concerted in its attitude to China, and I think there is a paranoia and a feeling of persecution among even policymakers in China that I think is not really merited by the reality of US policy.
But there is, China was disappointed that despite its growing size in the world economy, that it's not gotten more voting weight in the IMF and in the World Bank, and the U.S. Congress has not been, cooperative in that respect either. And now, it's not, of course, it could ask to join, but it's not a member of the TPP negotiations. So what's going on? Well, the BRIC countries have formed their own alternative World Bank. There's a new Asian development bank that China's centered on China that is competing with the old Asian Development Bank. I don't remember what it's called, but so in some sense, there are already indicators that China is creating a parallel set of international institutions that bring together some of the countries that don't feel as well represented in the existing institutional structure, and that sympathize with China's way of doing things. And so this raises possibility of balkanization of the world economy if it were to continue in this direction.
Well, I would just add, we were talking earlier about the importance of rules in the global economy, and that both through the WTO and these various negotiations, countries try to agree on sets of rules. I think China has a very different vision of rules, the enforcement of rules, than many other countries do, and that's a problem. I mean, they really don't enforce even the things they say they agree to on intellectual property rights in WTO, which are much weaker than what might be in some of these new agreements. And in fact, there have been companies who've been leaving China, going back to Mexico or somewhere else because, in Mexico you need a security guard to make sure you don't get shot by a drug gang, but they won't steal your trade secrets and your patents and produce knockoffs that look just like your product and cost half as much. If there's a China-centric trade group under China's current sort of leadership and orientation, it would probably have a very different sense of the rules of the game, or lack of rules of the game, but it might also be much more tolerant of state-led industrial policies, and that's something Brazil is interested in, sometimes India, and so it would be an interesting challenge because the U.S. has been so insistent on these rules. I think Europeans also are insistent on rules. The U.S. and Europe don't always agree on what the rules should be, but they both agree there should be rules. Yep. I think China has a very different vision on that. So that would, if these current negotiations fail, there's a real possibility of that. I mean, I think in TPP you have a really diverse group of countries. It ranges from very poor countries like Vietnam to rich ones like Japan, and just whole countries in South America and the Pacific. And in Europe, again, they may seem similar to the U.S., but there's a lot of differences. And so if these negotiations don't come to fruition, another vision of the world and of its rules, or lack of rules, may win out in 20, 30, 50 years. So it's actually going to be very interesting. The US hope, I think, is that if it creates a big enough club that everybody else like China will have to join and eventually agree to similar rules. But whether that's going to happen or not, I don't think we know yet.
You know, this discussion brings us to, I think, a good point of closure. These are particular trade negotiations, but they raise much broader issues about the rules of the game, about domestic institutions, the relationship between globalization and how we organize ourselves democratically and in terms of equality and other issues. So I think that the panel has done a great job in bringing out some of those questions and issues for us and helping us think through them. And I thank you for coming and for your good questions as well.